Hey traders, Raghee here. Welcome to Charts and Coffee for Thursday, June 3. Great to see everybody. All right, so we are waking up to a little bit of a pullback here, which is great because last week, if you caught the video, the free video, by the way, at the Simpler Trading YouTube channel, you know that I talked about a pullback, not sell in May and go away, but a pullback of the current overall uptrend to get opportunistic on. Now, there's a couple things that in 2021 I have been working on in the rooms, and I'm hoping that a lot of the members have been too. And that is a few things, and it's really going to be important this year to change a few, kind of language habits, and then the thought processes that change after that. Number one, don't refer to the markets. I'm working really hard at stop doing that. It's intellectually lazy, and it's not going to help you. So we don't talk about the markets, right? What is the markets? Dow, S&P, NASDAQ, Russell, well, they all represent different things to varying weights. We have the sectors within them, right? So I am trying to stop saying that because it becomes just verbiage we all use. It's going to be extremely unhelpful this year because we really have to look at a much more granular level of the markets, right? The overall markets. And in that use, yes, when we're talking generally, the markets is going to be a great verbiage. And, the language we use really does lead to the thoughts we have and the trades we're going to take. So when I look at the Dow pulling back, this Dow pulling back is absolutely very different than the NASDAQ because they are in two very different market trends. The NAS continues to be in distribution. The Dow is in an uptrend. So we can talk about the markets, but these two symbols are behaving very differently. So I hope you won't just kind of set that aside to semantics and think about the fact that there are corners of the broader equities and futures and currencies markets that we're looking at where there are trends. And there are certain countries whose equity markets look far better than the US, and we can trade those via ETFs. So when you get much more granular, you're not going to worry about a day where we have a minor pullback in the markets, but rather you're going to do what we like to do, which is you start thinking, time to go shopping. Things are on sale, and it's a much more empowering and opportunistic attitude. Anyways, I wanted to mention that I was drinking some coffee with my husband this morning saying, there's certain habits this year, and I've been working on it a while. It's a habit that is tough to break, which is referring to the markets as the markets, and good and bad. Today's a bad day. To who? Right? If someone's short, it's a great day. So it's bullish or bearish. It's up or down. And these are things that, believe me, through 2021 are absolutely going to help you start being much more specific about where your opportunities are going to be. So anyway, all right, moving on. Let's talk about what we've got here as far as opportunities for us today. All right, so kicking this off with GLD. So looking at gold, you mentioned the short-term divergence caught your eye. Well, remember, if we're looking at some general broader market risk aversion, what's risk aversion? That when we look at the broader markets, S&P, NASDAQ, Dow, do not include the Russell in the broader markets, quite frankly, but don't include the Russell, so S&P, NASDAQ, Dow. When those are showing weakness, we know that there's a huge pool of heavily weighted stocks that are moving lower, and that should likely drive money to other places. Now, the idea, diverging what, right? So maybe I guess, Milky, the question would be short-term divergence of what, right? So divergence has to be of something. What are we diverging from? So I'm not looking at this as anything other than a daily time frame that could be giving us the first opportunity at a pullback buy from an aggro level at the 13 EMA. So I'm sort of like, yes, it's time to start shopping, and we will look at GLD and GC for potential aggressive opportunities today. So I do like that opportunity a lot. Remember, if equities heavily weighted stocks, the equities are moving lower, that could drive real yields higher, and that is going to affect gold, and it's going to pull back. So gold and the equity markets don't move to a negative or inverse correlation. That's not the relationship. It's a relationship to real yields. So if we can get a real yield play, there's definitely something to keep an eye on. COPX has pulled back to the wave. Hey there, WR. It is yellow now, but was double green. That's perfectly fine. However, what was the quality of the double green and how much respect for the wave has it had? And I've got to say, probably not a lot. So then my natural question to that is, what is COPX trading with? What are the other stocks that are in these curated groups that we call ETFs? What is it trading with, and is it a relative outperformer? And that's where I would start the conversation, okay? Hey there, James. Good morning. Good morning. This would be considered a true gap in the S&P. Sure, let's take a look at the daily time frame. So if we're looking at intraday psychology and starting off, one of the things that I think is really ignored, underestimated, and sadly not taken full advantage of is this idea of looking at the daily and a few things that you can discern from it to determine how most likely the intraday in terms of day trading are going to behave. So terrific question, James. Yes. So we not only want to see sort of this general acceptance of what a gap is, which is an open below the previous session close, but I like to see, and this is a little bit more, and the word, I think true gap is actually a real terminology used mostly by volume and market profile folks. And this is an open that's also not just below the close, but it's also below the previous session low. So yes, it would be. Is this fade still valid? Oh gosh, the fade is even better. So if someone says, Rog, what are you looking at ES right now? 13 to 21, I'm going to start pricing out not only some SPY, but possibly looking at the outperforming sectors within the S&P. Again, getting more granular. Is the market down? Possibly, but where are the opportunities in that? So the market, meaning, let's say we're looking at the three broader indices. Well, within the S&P, we know that financials have been an outperformer. And so we might get more granular there. So James, yeah, I might have, as I'm scanning the day trade this morning in the futures room, my Sector Secrets Mastery folks, heads up, we might have some aggressive levels, some aggro levels that we're going to go shopping at. So thanks for the question, James. All right, next question is, what do I have on my eye for day trades? Same thing I do every morning. We're going to look at the levels that we get between 9:30 and 10 for V-score and HPMR, hourly price movement range lows. I'm still bullish. One thing that I do need to note is, let me count this off. See, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The only thing I've got to look at is where are we in relation to my two anchored VWAPs. And those of you that follow over at the Countdown Trader know exactly what I'm talking about. And if you haven't checked out the Countdown Trader yet, please do. Some great content there. We are in between the two VWAPs that I anchor. So today could be a little wishy-washy day. We've been surfing the higher VWAP for some time. And now we're kind of wandering into, oops, again, there we go. Or wandering into a zone where we could see some sort of spin cycle in the washing machine type action, but I'm still quite bullish. The double green JT trend, which is the structure of the market, is going to override really any of these VWAPs. So yes, we're probably in a choppy part of this overall bullish market. And I'm going to be looking at the market bullishly this morning, no doubt about it. All right, next up is, let's see, Costco. Costco, sure. So Costco, and it's interesting, Lorna mentioned this to me from the Sector Secrets room. A lot of folks were looking at that pullback buy. Makes me so happy when the members are seeing that this is rinse and repeat. Double green, pull back to the wave. Is it a relative outperformer within the ETF that it trades within? Great looking setup. I won't be surprised to see a little bit of weakness here this morning, but this is a fantastic look. And take a peek. Let me point a few things out to everybody watching. Why would something like this pop up on the radar of the Sector Secrets folks? Because we have a process still above the 200 EMA and still above the mean on the V score. Okay, so that's some general bullishness. Now we start getting to the really great part, which is take a look at the 34 EMA wave. This thing continues to move higher. In fact, we've had really good support at and near, like right here, at and near that level. And this time right in here, we tested the wave. You can see here, here, and here, tested the wave. So that is what I would consider a buy the dip. Buy the dip applies to uptrending markets that have reliable support at the wave and a double green environment. That's as good as it gets. And so there's your Darvis support, there's your alert, and so, or your signal. Yeah, that's a really good looking setup. So what's the good first target? Well, where have we exhausted before? It's always going to be the question. I think one of the worst habits a trader can have is place a T1, a first target, requiring new highs rather than acknowledging previous resistance. Your T2 can be up in the stratosphere, way up in here. Your T1 should be quite prudent. And that's the way we do it. We keep those T1s really prudent because first targets have the way in which I build trades and manage them. First targets have huge risk management implications. And that's why we've got to be really prudent about it. All right, would I look at XLE? I don't like the verbiage add. I know I can be really stickler about verbiage, but I don't like the word add. So what we want to think about when the brain says, can we add? The real process should be, is there a setup, right? Is there a setup? I don't see a setup. No, we're nowhere near a setup, my friend. I love that you're bullish. David, love that you're bullish. Half of trading, probably the most important half, if you will, of trading is looking in the right direction, right? You can't run east looking for a sunset, as they say. So lots of effort, lots of running, but if you're in the wrong direction, you're in the wrong direction. So one of the toughest parts of trading, and you've got this right here, David, looking in the right direction. So I'm with you to the long side, but there's nothing I can do up here. Not a darn thing. And if we're looking at crude oil inventory, as you mentioned, it's not really going to be primarily an XLE event. It's actually going to be more of an CL, crude oil futures, and RBOB, gas event. That's going to be the knock-on. What's got to go first? Movement in the commodity, then potentially movement in the oil stocks. So great question. Right direction, 100%. Just don't believe I've got proximity. And how do we know if we have proximity or not? Because we have our hourly and daily price movement ranges that let us know to a 68% probability what a market is capable of moving. And I believe we're 2 times the daily price movement range. So we would need a significant move to close that distance on the daily. Intraday, different story, but end of day, probably not. DIA, are we ready to get long the DIA or, the YM for that matter? I am going to look for that. Is it ready right now? It would be an aggressive level. But long is the side that I want to look for. So again, as I mentioned with David, we are looking in the right direction. I love where you're looking at. And I love that you asked about the Dow, not the sticking NASDAQ or tech stocks. So thank you for looking not only in the relative outperforming corner of these broader markets, but also looking in the right direction. Fantastic. Let's see. I get a lot of questions about whether the markets are overextended or in expansion mode or et cetera. We're not at new highs, for example, in the Dow. We're not at new highs in the NAS or the S&P. So it's it's hard to say the markets are overextended. And please remember that trends are always going to look overextended. So I don't worry about where the tops are because I'm not buying at highs, right? I don't worry about where the tops are. Pullback buyers don't have to. If you're a momentum buyer, if someone out there is a momentum buyer, then the highs do matter because usually momentum buyers are going to be positioned long around highs, and pullbacks are really pretty detrimental. So I don't care where the tops are. I don't know where the tops are. So therefore, is a market overextended, or have we moved too far, or we due for a pullback? The only honest answer anybody, including myself, can give you is don't know. Hope so, though. Hope so. As I like to remind my pullback buyers during moments of impatience, sometimes the most bullish thing you can be is a near-term bear. In other words, you're rooting for the bears. I may not be participating with them. I'm not going to be shorting double green markets. However, I'm rooting for the bears. Like today, oh gosh, I hope today, for the most part, bears in the broader averages have a good day because it's their good day that leads to our opportunity. So if we have a bearish days are going to be that pullback. The pullback buys in double green are going to be our opportunity. And that's specifically where we want to go shopping. So I really don't know. And honestly, nobody does. We can look at probabilities based upon whatever approach we have. But just remember that any kind of trend at some point is going to have a certain sort of top heavy look to it, right? Hey there, Dan. How are you? We have missed you as well. Great that you could tune in. Hope everything is fantastic. Yes, you hiked all the way back to Lake Tahoe and you're taking some R&R. Oh, fantastic. So John, so just so you guys know, Dan's joining us from on the road, and he's doing a lifelong. I don't hope you don't mind me bragging on you a minute there, Dan. So he's joining us from really mid-adventure. 1,092 miles done, just under 16 to go. Oh, that's fantastic, Dan. Thank you so much for tuning in and letting us know you're safe and sound and doing well. And gosh, almost halfway, third of the way. That's fantastic. That is fantastic. All right. IBM. I think IBM is interesting in terms of the double green, but not really in a zone that I can do much with. What's the zone going to look like? Take a look at the candle on the 19th of May. That's what a pullback looks like in a double green. Even take a look at the candle on the 12th, 13th, and 14th. That's what a double green pullback looks like. That is what it looks like. So, okay. Oh, by the way, charts and coffee. So today I was grinding my Kona pea berry, ran out. And so I mixed in a little bit of, Death Wish. I think a little bit of Death Wish dark roast, mixed it with a Kona pea berry, which is probably some sort of coffee heresy, but it's tasty. And then I've been throwing a tiny little scoop of Ceylon, has to be Ceylon, cinnamon in the coffee. It's actually been really good. I've been doing that. Tiny little scoop of Ceylon, cinnamon, and a little blend of coffees there. Ready for the morning, I am. What are my thoughts? Say there, Alex. What are my thoughts on UNH? Okay, so I sent this out to the folks in Sector Secrets. I've got exposure to XLV and all my cards on the table. Right now, we've hit all three levels and I'm taking a little bit of heat. It's allowable right now in terms of where we positioned the trade. And we had even a portion of our conservative just near the lows from yesterday. So not a lot of heat, but nonetheless, taking a little bit of heat. What's heat? It is unrealized loss. So I'm a little underwater here, which is fine. When you're pullback trading, it's not unusual. The market sinks a little bit lower within the retracement and you build your position, you scale in as that happens. Now, what's happening this week is for the 7th or 8th time that ACA is going through the Supreme Court And for the most part, the market really hasn't cared about it, but the decision is imminent at any time, I imagine, this week. And so I think you're seeing a little bit of sort of sell before the decision in terms of that. And yeah, we have not only exposure to XLV, but just yesterday we looked at PFE from a conservative level. So we've got some skin in the game here. But for those of you that are not aware, this is the healthcare narrative and it's the ACA. And there's two ways the markets are looking at it. It could be very, very bullish because this is, again, probably the last time we'll see something like this presented to the court, the high court. And that would probably send these markets up very sharply. So part of my setup here was to use that volatility to build a long position on the pullback. And the trick, the danger in a pullback that's based on as broad implications as this may have is we could get stopped out. But of course, those of you in Sector Secrets know we focus on paper cuts. We're not all in. Fixed ratio. This is not a huge position, but I do like the prospects of Pfizer and XLV here, especially the way that we built this trade. All right, so that's it for Charts and Coffee today. I will see you all tomorrow. Thanks as always for being here, and I will focus on really where the opportunities are if we see weakness in those relative outperforming indices, sectors, and stocks throughout today. Today might be a shopping day. Blue light special might be spinning. Be good to each other. I'll see you tomorrow.